Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to dive into the brilliant tax system of Malta. If you have not done so already, though, before we get started, there's something very important I need to ask of you, and that is click the subscribe button. Click the notification bell. I hope you like the video. If you do, please at the end like it. If you don't like it, say so in the comments. We're happy to hear from you. If you have questions about the video as you go on, please write in the comments. If you find, hey, listen, there's some subject you would like to hear me talk about, by all means, we'd love to create some great content for you, so please put it in the comments. If you're interested in these types of subjects, we talk about international structuring, international tax planning, company formations, bank accounts, residencies, citizenships, all these types of things, then please reach out to me. You can book a consultation call, clarity.fm/Michael Rosmer. There's a link below, as well as check out our websites, offshorecitizen.net, offshorecapitalist.com. Okay, with that in mind, let's dive in. So, Malta. I wanted to talk about Malta because I had a call with a client earlier today, and we were discussing it, and there was kind of a misunderstanding about how Malta views certain things. And these things happen to be really useful. So, of all of the countries in the world, I would say that there's a handful that are really smart, okay? It used to be, I think, that there was some that were also quite smart, but they've kind of got knocked out in the reforms of international tax. So the ones that really stand out today are, maybe like Georgia, Malta, maybe Estonia. Like there's a very small handful. And of these, I would say Georgia and Malta, to me, stand out the most as being kind of some of the most interesting. There's a whole bunch of reasons for that. But today we're going to focus on Malta. And we're going to focus primarily on the corporate side, but a little bit on the personal side, okay? All right, so how does this work? Well, so Malta, one of the things that's very interesting, a lot of people have looked at it as a place to move, and I've talked before about how, in spite of the fact that it's pretty compelling from a tax standpoint, it's pretty interesting from a residency standpoint, actually living there is not so interesting, and so very few people actually end up going to live there. Likewise, in spite of the fact that, on paper, their corporate tax is really cool and really interesting, it's virtually impossible to bank there. It's a disaster. It's bureaucratic. It's expensive. And so in practice, people don't do it. So unfortunately, this is like the little bit of the facade that is Malta. The facade looks great, and then you kind of step behind it and you're like, ooh, I don't know. So that being said, we're going to talk about some of the specifics today. So first of all, just for those who aren't familiar, if you go and become resident of Malta, so you're resident and you're not domiciled, there's a possibility of having a remittance-based taxation system, which basically means that if you don't bring the money into Malta, it's not subject to tax. And there's some nuances about this, and it varies whether you're an EU resident or not. And then there's different treatment a little bit for capital gains, actually more favorable. But anyway, the bottom line is just that it's a pretty interesting tax system from that standpoint, where although the headline tax rate is fairly high, the real tax rate that you pay can be quite low. And I think that's like the thing that's kind of fantastic about Malta, okay? Anyway, so that's the first part. The second part, though, that I really want to dive into is this one specific thing they have around their corporate tax, okay? Malta's one of the very few countries that has a rule that separates domicile and residency, okay? Now, for the purposes of like a corporation, what does domicile mean? It basically means that the company is registered in Malta, okay? And this kind of mismatch is really, really important, because a company which is domiciled and resident in Malta is subject to tax on its worldwide income, okay? But a company which is resident but not domiciled in Malta is only taxable on its Maltese sourced income or income remitted to Malta. And if you think about it, this really makes a lot of sense, because they have a whole kind of corporate service provider industry in Malta. They were serving the gaming industry in particular for a lot of years, one of the major gaming hubs in the world. And what this meant is you wanted to be able to serve all these foreign clients without creating tax liabilities for them, okay? So we're going to dive into the specifics of this concept, because this concept is very wonderful, and I think kind of not really understood. Because people will say, okay, great, I could have this local company, and that company could be taxable, or I could have this foreign company. Is the foreign company taxable? Okay, and most of the time what ends up happening in Malta, if you go there, is they talk about a specific piece of planning, and under that piece of planning what happens is you have a domestic company, okay, and that domestic company is taxable at a really high rate. So Malta, their headline rate is one of the highest corporate tax rates in the world. It's 35%. But this is again part of the brilliance of Malta, is that they give this tax refund, which can be, in a bunch of cases, up to 30 of that 35%. So you can end up with an effective tax rate of 5%. Okay, so you basically pay the 35 and then you get a refund. And that's only true if the company is owned by foreigners. And so basically you end up with this two-company structure where you've got one company which is then owned by another company. And when the first company pays out a dividend to the second company, you get this tax refund, and that's how you end up with 5% tax. And it's great for them because it means they form a whole bunch of extra companies, and off they go. It basically these corporate service providers make more money. That is really interesting, in part because a lot of countries in the world look and they say, hey, listen, we're going to blacklist the countries that have a tax rate which is, let's say, under 15% or under 12% or under 10%, whatever the number happens to be. It's often a percentage of what their normal tax rate is, right? So Singapore may set it at a certain level. Portugal may say, okay, great, our tax rate is X, then 50% less than that is kind of the allowable limit and things like this. Well, here, your headline rate is high. So most countries don't really look at Malta as a tax haven, and yet you can achieve this low tax rate, which is really cool, right? But the other thing, there's actually a few other things that are really interesting, like Malta for a long time had no transfer pricing rules. That was a really interesting thing. They didn't have dividend withholding tax, also a really interesting thing, right? But one of the things that I think is most fascinating is this domicile residency thing, okay? How does this work? Well, let's say that you form a company abroad, okay? So you're in Malta, you're resident in Malta. You're of course going to control your company from Malta, right? Because you're there, right? That's pretty logical. So you decide to go and form a company somewhere else. Doesn't matter where else. Now, the concern would be that Malta's tax residency rules at a corporate level are based on management and control as well as place of registration. In other words, if you have that foreign company and you manage and control it from Malta, it's going to be a Maltese company, and therefore it's going to be subject to tax in Malta, right? Well, that's the part where it gets a little bit interesting, okay? We have a couple things that happen in this situation. First of all, it is possible that based on the terms of a tax treaty, you could end up, the tax treaty could override the local rules, okay? But interestingly, actually, in a bunch of Maltese tax treaties, they actually work the opposite way. So I'll give you an example. The Maltese-Hungarian tax treaty says that in the case of a dispute between the place of registration and the place of management and control, the company becomes tax resident in the place of management and control. What this means is that in theory, if you form a company in Hungary, but you manage and control it from Malta, that's actually a Maltese tax resident company, okay? This is very interesting because Hungary is not normally a country that could have a non-resident company, but under this tax treaty, it can have a non-resident company, okay? These are little things that people just don't dig into, but once you start going into it, it's quite interesting. What would the consequences of this be? You could say, okay, great, well, maybe I don't have my 9% tax anymore, but on the other hand, I'm going to get messed up because I'm going to have this Maltese tax to deal with. Not exactly, because as a company that is resident but not domiciled in Malta, it's only subject to tax on the income that is sourced in Malta or remitted to Malta. So if you don't have income that is sourced in Malta and it's not remitted to Malta, then that income is not taxable in Malta. But of course, it's not a Hungarian resident company in this example, right? Therefore, it's not subject to Hungarian tax on its worldwide income. So what do you end up with in here, right? Quite an interesting scenario. And this can open up a bunch of possibilities with respect to being able to take advantage of foreign banking that some people somehow don't really look at too much, right? So very interesting kind of piece to examine. It's not for everybody, of course, but in a few cases, this is quite interesting. This brings me to the last part. So basically what's happened is that due to the EU Anti-Tax Avoidance Directive, which came out a few years ago, they have basically imposed on EU member states that they have to create a certain set of standards. And so part of that is bringing CFC rules in. So for instance, they brought CFC rules into Bulgaria, who didn't really used to have them. And so there's CFC rules in Malta, okay? And so you can say, okay, great. Well, how are these CFC rules? Well, they're actually pretty tricky, right? They don't have a big loophole. But remember that CFC rules apply to foreign companies, right? That's the whole definition, controlled foreign companies, right? So if a company is tax resident in Malta, then it's not subject to CFC rules. But if it's tax resident but not domiciled in Malta, then what does that mean, right? So anyway, this is some of the kind of interesting things that I think are worth playing around with Malta. Again, most people don't want to go and live there. But if you do want to live there, there's some things you can play around with that are quite interesting. If you're in a situation where you can get banking for a Maltese company, it's pretty expensive to form Maltese companies. It's pretty expensive to maintain Maltese companies. But if you have the right scale, there's structures that you can use that are some of the very few countries that will get around the rules of some other places. So some of these places that have blacklists will very often not include Malta. They also will not include Georgia, as I mentioned. So yeah, being able to kind of play around with these are pretty interesting. So for instance, you could get around Singapore's rules in this way. So that's one interesting opportunity. So anyway, I hope that's helpful. And if you'd like to kind of learn more about these subjects, please reach out to me. You can book a call at quarterday.fm/Michael Rosmer. There's a link below. And like the video if you liked it. If you didn't, comment. If you have questions, comment. If you would like to see more of this type of thing, please click the subscribe button, click the notification bell, tell your friends, become an advocate. We would like that. And go and check out our websites, offshorecitizen.net, offshorecapitalist.com. And I'm going to look forward to seeing you guys very soon on the next video.